India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Mangalam. Guys, good morning.
Good morning.
Good morning.
So we're talking about the market cues and, the start likely to be in the green, etc. That's about later. Prashant, wish you a very, very happy birthday. Another round around the sun, and may you keep being healthy, wealthy, wiser, prosperous, and more importantly, happier.
Thank you so much, Mangalam. Thank
Many,
you.
many happy returns of the day. And viewers, if you're wondering why there was this little awkward pause at the start of the show, that's because we were trying to corner Prashant into getting us a party. So that conversation is going to continue off and on air. But wish you a fantastic day and fantastic year.
Thank you so much, Surabhi. As my wife says, closer to 50 than I am to, actually 35. So I think, but yeah.
We freeze at 35, don't we?
We do?
Okay.
Some do, not all.
I don't know what 35 is.
Yeah, of course, of course.
So, since you're closer to 50, you'll raise the bat at the half-century mark?
Not
Not
yet.
right
Not
now,
yet.
not
Not
right
yet. Closer to 50, not there. All right, well, let's kick it off, kick off market action and what you need to know as we begin another trading session here. You basically have another decent day as far as Wall Street is concerned. The rally started last week and it is continuing. And the markets overnight are giving us good cues. The S&P ending about 1% higher, the Nasdaq ending about 1.4% up. The S&P is now just about 1% away from the pre-jobs data sell-off levels. That's quite incredible, isn't it? And it's coming fast and furious. 11 sectors, all 11 S&P sectors were higher. 82% of the stocks which traded were in the green. I'm just sort of highlighting some of the finer data points here in terms of what happened in the US market, just to say that it was not just 7 stocks on the Nasdaq which did the job. It was a broad-based move after the sell-off that we've seen, 1.5 odd weeks ago. Of course, it helped that there was no real sort of souring headlines or risk events or bad data, etc. Dollar index, and that's the big one, right? The dollar is continuously selling off. It's below the psychological 102 handle. We left off at 101.87. So day before yesterday, 0.6% sell-off, another 0.5% yesterday overnight. And that gets us to under 102. Treasuries consolidated. The 10-year yield is down about 1 basis point. Curves, longer end flattened. And by the way, the other data point, which is the USD JPY, that is calming down as well. The dollar is depreciating. The yen actually is now back to about 146.6 from 145 levels. The high was about 142. It moved from 162 to 142. It's now come back, not quite there, but we are getting there. 146.6 is where we are at. Oil prices sold off sharply, and that is the bigger move actually out of everything which happened overnight. 2.5% lower, and we are now under $78 per barrel mark. It's not a bad setup at all. I mean, equities are higher, dollar is sharply down, yields are flattish, oil is down sharply. I mean, I think it's a good setup to wake up to if you're thinking about going long and looking at upside levels. And that gets us to where we left off here and the levels. So the Nifty consolidated. It was a quieter session, but I mean, of course, you're coming off the 400-point Friday rally. The small caps rally, the small cap index was just about under 2% higher. So bulk of the price action was in small and mid caps, and that did very, very well. Near-term hurdle for the Nifty, and I think we should get that done today, is 24,686. Yesterday's high was 24,640, 38 to be precise. So we never got to the 686 level. What is that? It is the upper end of the gap area, which was caused by that global sell-off. And it also coincides with the 66% retracement of the fall that we've seen. Now, closing decisively above the 24,686 level, this level, can take us towards the all-time high of 24,078 and beyond. But you need a decisive close above it, and then we'll talk about higher levels therein. Bank Nifty has been the weaker of the two indices. It, by the way, supports, same 24,100 where the market has found, a reasonable amount of buying coming in over the last 10 days or so. I don't think that should come into view today. Nifty Bank needs to take out the 20-day moving average and the swing high. Both are the same now, by the way, which is 50,830 as of yesterday's close. And again, here also, I mean, looking at global cues, etc., maybe we take a shot at it. We'll see. Support for the Nifty should come in around the lows of support for the Bank Nifty on the downside should come in at about 49,654, which must be defended. The Gift Nifty will come up on your screen, and that should give you a sense of how we are starting, 50 points higher. So, a slower but higher start is preferable, and then you sort of build on it instead of a big gap up, which then makes it all the more difficult for newer people to come in and buy on top of a 150 odd point gap up. So this is fine, and hopefully we're able to get over that 24,686 hump and then maybe look beyond as well. So it's not a bad looking global screen, as I said, Surabhi.
And your shirt is matching the sentiment, I think, Prashant, with all the green.
Shirt and tie.
but yeah, as you said, probably slow and steady wins the race, they say. So if we kind of start gradually and then build on it, traders will take that with both hands, because the setup has been very, very positive. I mean, we've got Wall Street with 8 consecutive days of gains, at least the 2 indices. That's the S&P and the Nasdaq. Big moves coming in over there. By the way, the only chatter that I'm sure Wall Street will start sort of, looking at as well, political chatter, is Kamala Harris talking about an increase in the corporate, tax rate, and a big increase and a big rollback from the Trump era cut. She's now saying corporate taxes should be at 28%. Trump had slashed the rate down from 35% to 21%. So a lot of the political chatter will, of course, keep Wall Street occupied, along with all the, action around central banks. Speaking of central banks, here in Asia, China has been in step with expectations. That they haven't touched the loan prime rate at all. It's been left unchanged this morning. So no hiccups there. And some of the key markets like Japan continue to build on to the momentum. Japan is up another 2% this morning. So that's good news. Of course, there's a lot of dilly-dallying over the extent of the cuts that we may get from the Fed in September. And later, this morning, if you look at the Fed Watch tool, the probability of a 50 basis points cut is reduced quite a bit, considerably, to about, I think, just about 50% right now. So let's see how that plays along. Now, the fund flow picture here, again, FIIs went back on the sell side yesterday. Remember, just a day prior, we were talking about a minor buy of about 700 odd crores. Well, that reversed again yesterday, and the selling was to the extent of 2,600 odd crores. Domestic institutions or buyers, about 1,800 crores. Pull up the FII stats for the last couple of months, and we've turned negative all over again. So the number was negative in May, around 25,500 odd crores. June and July were positive. August, we've rolled back to a negative net number. This is the final number, not the provision, the final number that comes in. So we are at negative 20,000 crores from the FII fraternity. But hey, we've got a great DII support coming through. So not much of a problem. But again, just to place this on record. In terms of corporate action today, actually more than corporate, market buying, selling action. Zomato is going to be the stock on my radar for sure, because there's a lot of buzz that Antfin is looking to pare down a little bit of its stake between 1.5% to about 2%. So let's see demand. The stock has been on a massive tear. And the sense is that, any dips will probably get snapped up because, there's a lot of, shall I say, hunger for Zomato on the street. Mangalam.
Well, hunger and lack of patience. People really are seeking a fair amount of convenience in the quick commerce business. And there is a fair amount of demand because, the size has been up. But more on Zomato in just a bit. For our markets itself, there are a couple of things that I'm looking at. Yes, it is likely to open fairly strong, but where does it close? That's extremely crucial to track. Why is that? Because yesterday's open and high on the Nifty were absolutely at the same level. The Nifty managed to hold on to some green, the sensex a bit of red. That's because the financials are under a wee bit of pressure. You have, both the Nifty Bank as well as the Nifty Financial Services, which were about 0.25% lower. Broader markets, no problem. We were talking about, 82% of S&P 500 stocks doing extremely well. But our markets as well saw great gains. In fact, the Nifty Next 50, which is a barometer of where, good quality mid-caps are, that was up almost 0.6% in yesterday's trading session itself. What is it that dragged the markets lower? Yes, on, the FII selling front, there was selling, but there wasn't enough buying by the DIIs, and as a result of which, the net flows were, a sale of close to around 900 odd crores. The FIs bought in index futures the previous trading session. Then again, yesterday sold about 304 crores. The net long contracts, short contracts exposure moving to around 50% each itself, with the net exposure now closer to around 350 odd contracts on the short side. Basically, absolutely at an even keel. The 24,600 mark seems to be a bit of a fulcrum for the Nifty. 24,600 call and 24,600 put. both of them fairly active. So, putting the option-based range on the Nifty at the lower level to close to around 475, and on the way up, 24,700 is something that we're looking at. And this ties in with the technicals of the market as well, where the 20-day moving average of the Nifty is 24,480. And the 20-day is important for both the Nifty as well as the Nifty Bank. For the Nifty, it is an important support. For the Nifty Bank, it is a crucial resistance. Yesterday's high on the Nifty Bank as well was closer to that 50,828 mark itself. What can move the needle? In the second half of trade, watching out for HDFC Bank in particular. Why? Because it defended the 20-day moving average yesterday. On the way up, it's the 50-day moving average that we will keep an eye out on. This is the highest rate on the Nifty Bank and on the Nifty Financial Services Index, along with the Nifty as well. So the Nifty Financial Services expiry plays out today. It's a Tuesday, so we'll watch out for that as well.
Mangalam, thank you very much for that. So that's essentially a nice wrap out of what you need to watch out for in terms of specific levels and the markets overall. Let's get